Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about more assets and more assets. Today it's about stocks. That's right, ladies and gentlemen, because you can use stocks to borrow, use margin to borrow. That means it's an asset. We got to talk about accumulation this year in 2021. So it continues. And welcome to Foci Optics. Check. Stop struggling out gear. The no fear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And as you can see, we're on the Stop Struggling Now YouTube channel. And I want to thank you for being here. And please share these videos. Let other people know what they can do besides what they're taught in school. Anyhow, here we go. Please notice the join button over here on the right hand side. This is to become a member of the channel. And I give special messages to the members under the community tab, and I do 1 or 2 videos during the month, especially for the members who join the channel and pay a membership. And with that said, let's move into the other assets, the stock market assets, the major asset where 1% of the wealthiest own 50% of the stock market, and the top 10% of the wealthiest own 85% of the stock market. That tells you where you need to be, ladies and gentlemen. So let's get to it and get your free shares of stock. How many times do we have to keep leading you to the water? Here's Webull. During this month, they expanded their promotion. You can get up to 4 free shares of stock, but here's the kicker. You sign up, verify your email address, you get 2 free shares of stock. You deposit $100 or more, you get 2 more free shares of stock. This is worth it, ladies and gentlemen, because you're investing in your future. All right, here we go. There's other factors that go along with an asset. How do you know it's an asset? Because you can borrow against it. Okay, that's one of the criteria for an asset. The other criteria for an asset is, are you making money while you sleep? So that is the question. And with stocks, you make money while you sleep because they give dividends. They go up in price. These kind of factors help, and you don't have nothing to do with it other than purchase it with your hard-earned money. All right? So what I want to talk about is, when you sign up with Webull, you make sure that you are in their stock lending program. Why? They cut you interest money. They loan out the shares, borrowed so to speak, and they give you some of the interest. And it's for free. Doesn't cost you anything additional. All you have to do is log into your Webull account and just make sure it's enabled. That's it. Free money sitting on the table. How much more free money sitting on the table? You get dividends. You can get free money from the stock lending income program on Webull. Free money, ladies and gentlemen, for something you should be doing anyhow, investing in your future. Let's go with Robinhood. They still are giving 1 free share of stock, except they have started doing something new. When you download the software, in order to get your free share of stock, they want you to link a bank account. Not that you have to upload money, but you have to link your bank account and verify your email address to get that 1 free share of stock. Now, remember I was talking about borrowing? Again, even at Webull, even at Robinhood, and even at E-Trade, Fidelity, you can borrow against your stocks. So you have to understand what I'm talking about here. if you needed to borrow. I don't recommend it, but if you needed to. You never know, emergencies happen. But at least you have the assets. The stocks are assets. So margin, you can usually borrow 30, 50%, sometimes 60% of what's in your portfolio. So let's make this simple. If you had $100,000 in your portfolio, emergency came up or an investment opportunity came up and you said, hey, can I get $30,000 out of my account? Yes, you can. It's that simple. Of course, there's going to be interest, but the $100,000 is not really touched. It's only going to be touched if that $100,000 goes down to about $60,000. Then they're going to make you sell some stocks to pay for that $30,000. That's how it works. But let's use it the other way. You have $100,000 in there. You wake up tomorrow and it's now $150,000. The $30,000 is still a loan. So you still have $150,000 in your stock asset portfolio. When you pay back the $30,000, you will have the $150,000. You don't lose anything. It's not like you're taking away. So when you borrow against your $100,000, you don't just have $70,000 in there. So it still earns at the $100,000 level. All right? So that's what we're talking about. This is why the rich keep getting richer, because this allows them to take advantage of opportunities even if they don't have any money. And guess what else? They don't need credit, ladies and gentlemen. Don't you want to be a top 10%er? So you don't need credit either? It's that simple. But they're not teaching you this kind of stuff when you're 5 years old in kindergarten, 10 years old in 5th grade, 17 years old a senior. They bypass all this, because if they would have told you when you were 7, 8, 9, 10 years old, hey, put a little $5 here, $3 there, go out here and do your lemonade stand and put some money in a stock market. Tell your parents to put it in a 529 for your education if that's what you want to do. But either way, if they would have told you that, could you imagine being 8 years old, 5 years old, 10 years old, and by the time you're 30 years old, that's 20 years that you would have had money working for you? Everybody would be a top 10%er, but they don't want to do it like that. Come on, get in the game. All right, let's go on further, because there's a lot of you who don't want to invest, don't want to realize that stock are assets. Instead, you still want to be out here popping bottles, still want to be out here buying cars, still want to be out here buying houses without renting them out and wasting money. And again, Wealthfront, set it and forget it. And the reason why I keep saying set it and forget it is because you just need to put in $500. They have a RoboAdvisor program. They invest for you based on your criteria. If you are a risky person and say, hey, I'm the riskiest of all, just go with the high risk maneuver, okay, that's an option. You say, hey, hold on now, I'm kind of like in between. I like a little risk, but not that much. So maybe I'll be in the middle of the road. And then maybe you're like, it's 1940 all over again. And you're saying, hey, the world is a disaster. Maybe I should just play it safe. Well, you can do that as well. So either way, Wealthfront helps you out. But guess what? From $500 to $5,000, they don't charge you a management fee. But after $5,000, they start charging a management fee, which is 0.025%. But they're managing your money. You don't have to do anything. All of you who send money to a 401k, and then you go, hey, can I get some money? And they start going, whoa, wait a minute. What do you mean? That's not your money no more. Hey, I got $200,000 over there. I got an emergency. Hey, can I get like 40K? They're like, oh, we got fees here. Come on. Wake up. Keep your money close to your vest. Stop giving it away to the top 10%ers so they can earn 100, 200, 500% on the money. Meanwhile, ship you 10% and you think you're good. Anyhow, point I'm trying to make is Wealthfront is your money. It's almost like a bank. It's a fintech. And once again, if you have $25,000 or more at Wealthfront, guess what? You have an automatic line of credit. You don't have to ask to borrow your own money or against your money. They just automatically, you want to take out 10,000, 5,000, whatever their credit line determinations are, you can do it just by a click of a button. You don't have to ask. You're not being charged some fee. Somebody ain't calling you up going, hey man, you can't take some money out of here. We want to charge you some tax. Look at this. No application process. No credit check. Once again, no credit check. Now you're understanding the power when you are a top 10 percenter and you're wondering how people are able to just buy stuff on a dime, investment. Like I'm in the Dominican Republic and they open up a condo, pre-construction condo, and they have like 90 units and somehow 80 units are sold within 48 hours. There's a reason, ladies and gentlemen. And these are some of the reasons I've been giving you the crypto assets, the stock assets. Think about it. Your house can be an asset as well because you can get lines of credit, home equity lines of credit, HELOCs on your house. But again, that's a loan. Your house value can still go up or still go down. So, but you're actually paying for the loan on your house because you live there. That's the difference. Once you have your money in this account, let's say at Wealthfront, and you have $25,000 or more, Tesla bounces up from 500 to 700. Great. You're not borrowing against that. So again, this is why it's very powerful that you're into the stock assets. And now crypto is mirroring the stock assets, trying to do the same kind of thing. But we're talking about stocks today. So there's Wealthfront. Now, let's talk about something else regarding stocks that a lot of people overlook, because a lot of you are sitting here saying, hey, Eric, I want to have my own LLC, my own business. Well, that's a good thing. A lot of you do have an LLC in your own business. But did a lot of you know that there's a SEP IRA for self-employed and small business? Your business can make a contribution. You can have your agreement, have your operating agreement. You can have it say, you know what, we're going to contribute 25% to employees. You make yourself an employee of your company. You can invest the maximum allowed as an employee. Then your company can match whatever you say you want the company to match. Are you getting this? Tax repercussions, ladies and gentlemen. You're going to be paying less taxes. All right? I'm not an accountant. I'm not a financial advisor. So I suggest you get with an accountant who understands just what I said. He'll say, oh, yeah, you can do that. Meanwhile, some of you are flying blind. All right? And again, you can do self-directed. Here goes another one, 401k. This is E-Trade. I have a link down below for all of this. A link down below for Webull, Robinhood, a link down below for Wealthfront to sign up with them. You can just start with Wealthfront for $1, by the way. They won't manage anything until you reach $500 because it's a bank. You get a debit card as well. Now, E-Trade, I'll have a link down below for that. Refer a friend. And the other part about E-Trade, let me go over here to the retirement side. What I want to say about it is not so much the retirement part, but E-Trade has extended hours trading. So does Webull. A lot of you are sitting there saying, how does the stock price go up before it opens like 9 a.m., 9:30 a.m. Eastern time? And it's because people have already been trading. So overnight there is some news about stock, let's say 6 in the morning, 4 in the morning. Now people are actually buying the stock at 4 a.m. on E-Trade because they have extended hours. On Webull because they have extended hours. Robinhood does not have extended hours until 9 a.m. So between 4 a.m. and 9 a.m. there's a whole bunch of trading going on. And a price of a share of stock could be going up while you're sleeping and you can't do nothing about it if all you have is Robinhood. All right? But anyhow, let's get back to this retirement situation. You can see here, IRA for minors, the 529 investment for educational purposes. Now remember, a 529 is based on education only. It's not like you're investing and then you can just say, well, I'm going to take it out. You get tax, you don't have to pay tax if you take the money out and put it in education, like going to a private school, going to college, things like that. And that's a great program to get started. All right. And as you can see, they have other investment vehicles. Now, let's get down to the other part about stock investing. Because as an employer and an employee, if you have an LLC or an S Corp, you can sit there and, again, like I said before, as an employee of an S Corp, I have to cut myself a W-2. Now, as an individual, it's already been taxed. So now I can put my money in a solo 401k because I'm the only person in the company. So I can have a solo 401k. And here's the 529 that I was talking about. But let's see here. Let me get to the solo, because TD Ameritrade, for everybody on podcast, TD Ameritrade does have the solo 401k. I'll have a link to this down below, ladies and gentlemen. So see, as a solo, and you don't have any other employees, you can see here, I'll set up funding. 401k must be established by an employer's tax year, funded by employer's tax return due date. Simple enough. Now, here's the thing, just like I explained. You can write in, you can match if you want, which is awesome. Under the solo 401k, I can put up like $19,000 of money into this plan. Actually, we can put more into the plan because if you're married and have a spouse, you and your spouse counts as employees. That's it. And both of you can get that. So you can actually end up putting 60,000, 40,000, 50,000 over there, and you can potentially match it as well. Then you have the SEP IRA. So this is next level moves. This is why you don't understand where the top 10 percenters pay less in taxes. There's a reason. Because remember, as a person, just like when you get a W-2 at work and you invest, you get a tax write-off. Generally limited to $6,000, $7,000, $10,000 per year, depending on who you are. But the fact of the matter is, when you are doing the self-employed in your own LLC, your company can match into your account, which now means you can have way more money added to your account, which now that account, the solo 401k, is investing in stocks, index funds, ETFs, and we're making money hand over fist. Tax implications? Minor. We're still going to have to pay tax on capital gains. But again, keep in mind, you're putting in already taxed money. Now, take it out. Depends on when you take it out and how you're going to be taxed. But again, you're bypassing tax codes legally. All right, let's get into some stocks. A lot of you know. Well, no, you guys don't know, because only the members know that I purchased some bingo, B-N-G-O, B as in boy, N as in Nancy, G as in George, O, this past Monday. It popped up nicely yesterday. And yes, I got in before it popped up, which was nice. Went up like $2, $3. And then it came back down. But nonetheless, a little bit. The drone company, G Money, gave us this on a Friday night a month ago. Let's go look back a month ago when it was $2.66, under $3 a month ago. This is what happens when you miss the Friday Night Lives, ladies and gentlemen. Anybody can afford $2 stocks, even if you were to buy 10 shares, $20, $50, whatever, $100, $500, you'd be up a lot already. 130% on your money, so you'd have doubled your money, and then some. All right, let's talk about DHT. D as in David, H as in Henry, T as in Tom. 14.81% dividend yield, ladies and gentlemen. Double hull tankers, they store oil. All right, with the advent of EV vehicles, renewable energy sources, oil might start having to be stored a little bit more. So it's a good thing that these guys are in the tanker business and they're giving out 14, nearly 15% dividend money per year. And Bloom Energy. I have this up here, but it's just something I'm looking at. I haven't invested in them yet, but keep them on your radar. Or you can invest in them because they're an energy company. All right? They're in San Jose. They do oxide fuel cells that produce electricity on site. You might want to get electricity on site when you have EV vehicles, similar to SBE switchback. So again, ladies and gentlemen, this is all I have to say today about the stock market. It's another asset that you should be adding into your portfolio. So we start out 2021 talking about assets and what you should acquire. When the stock market goes down, please let me know in the comments down below what we're supposed to do. This year in 2021, buy more. So yesterday, when it went down 300 points on the Dow, 350, buy more. All right? Over history, it always recovers. Why? Because the top 10 percenters, top 1 percenters, they don't lose. Come on. Join the party and get your free shares of stock. The links are down below in the description. And thank you for watching. And thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I always bring the freebies first, just to get in the game, because you never know what's going to happen. You never know if you're going to get like an Apple stock, an Amazon stock, a Ford stock, a nice stock that goes up for free. Then you might think, hey, you know what? Maybe I should put $20 here, $30 there, $100 there, $1,000 there into the stock market. Let's see what happens. Well, you sit back and relax, ladies and gentlemen. You don't want to sell your shares of stock in the first year because you got to pay 25% capital gains on any profits. After the first year, then it goes down to 15% on any profits. That 10% swing could be major, depending on who you are. So, this is all long-term investing. Remember, get the EV play, electric vehicles. Get the AI play, artificial intelligence, C3. Electric vehicles, NEO, LI, switchback, SBE. How about those for starters? All right. Plug, PLUG. Blink, BLNK. Beam, BEEM as in Mary. All that. C3, artificial intelligence. Apple, Microsoft, Amazon. That's right, ladies and gentlemen. They're in AI and cloud services. Gonna need all of it. All right? Hopefully I'm giving you guys some gems, and then you just hold on tight for a few years, because now the A-team is here. They care about renewable energy, renewable sources, trying to get more people into workforce with high-paying jobs. Man, I should be their little promoter. But anyhow, let's talk about it later, and keep your head up. Keep moving, and I'm out.